in the Eurozone's second largest economy grew. Lecornu is a close ally of President Macron, but his new cabinet lineup had angered opponents and allies alike, which led to this swift and unexpected resignation. French banking stocks led the declines on the markets, while French bond yields rose and the euro fell against the dollar. And the last thing you need to know is that gold hit yet another record high. The price now really zeroing in on the $4,000 an ounce mark. This surge is down to expectations that the Federal Reserve will cut interest rates further this year, and the fact that the US government shutdown continues to drag on. The precious metal is now up almost 50% year to date. And remember, I told you all about the debasement trade on Friday. That's when investors shun major currencies and instead buy both gold and Bitcoin together. Well, Bitcoin over the weekend, it climbed over $125,000. Well, to help us unpack all of these stories and more, I'm joined by Janet Moy, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for joining us. Let's start with this shutdown. It doesn't seem to be putting off investors when it comes to buying US stocks. Why do you think that is?
Hi, good morning, Ramzan. Thanks for having me. I think the reason is because investors are overall thinking that this is likely to be temporary and is likely to have minimal economic impact. In fact, if you look at past shutdown, it really has limited economic impact and market impact on average. So I guess the market is just, having seen this movie many times, they're not reacting too much. And also, I think the key driver for US equity markets remains firmly on artificial intelligence. And particularly, we've seen so many mega deals in the AI ecosystem. So that is serious, the main driving force of the US market, and it is basically intact for now.
But don't you think without for instance, we didn't get jobs numbers on Friday, without that data, are investors sort of a bit blind in terms of what they can predict?
A little bit, but not all, because we still have private sector surveys and data that is available, which ultimately is pointing to softening in the US labor market, but overall not falling off a cliff. I think that's a very important message. As long as the US labor market is just softening and still overall regarded as manageable and resilient, I think the market still has reason to grind higher. Particularly, softening labor market further reinforces the case of further Fed rate cuts.
And Janet, let's turn to France now. And it was a bit of a surprise this morning to see the new French Prime Minister and his government resign. How worrying is this? I mean, France's political upheavals, they're nothing new really, right?
I do think it is starting to get more worrying, because you're right that it is nothing new, but we have seen a couple of changes in the Prime Minister already. And there seems to be this political gridlock that is impossible to break. And I think markets are worrying that even if President Macron appoints another Prime Minister, it's going to be the same. So there's no breakthrough in how to pass a new budget, which ultimately just means political gridlock, fall in economic confidence, fall in business confidence, and really hurt the whole market sentiment. And ultimately, I think markets really worried that eventually a new election has to be called to break this gridlock.
But it was a bit of a different story in Japan. We expect a new Prime Minister to be appointed later this month, and she's expected to introduce more fiscal spending and pressure the Bank of Japan to keep rates low. Is now the right time to be looking at Japanese equities even more closely?
Yeah, it's a very different sentiment there in Japan, but overall I think the drivers are a bit different. So we saw a big depreciation in the Japanese yen, which tend to boost Japanese exporters, and markets are expecting potentially more fiscal stimulus because the new leader is pro-stimulus, and she also wants to call for lower interest rates. So overall, this is stimulative for the economy, which ultimately is good for the markets. But I think the concern is that at the end of the day, that would be more government borrowing potentially, which again comes back to the concern of fiscal sustainability, a wider fiscal deficit. But the beauty in Japan is that at least only a small part of the Japanese government bond market is owned by foreigners. So it is arguably less of concern compared to France, which, about 50% of the bond market is owned by foreigners.
And Janet, on Friday on our show, I spoke about the debasement trade where investors shun major currencies in favor of buying gold and silver together with Bitcoin. Do you expect to see this kind of trade continuing?
I think so. I think what we have seen, with regards to the shutdown in the U.S. government, with regards to what's happening in France and Japan, ultimately is a collective theme, which is that it is very hard to cut spending, and it's very hard to increase taxes. And after all, government will have to borrow more. So it is ultimately a fiscal sustainability issue, which ultimately could lead to central bank just printing more money, and that leads to monetary debasement and inflationary consequences over the longer term. And in such an environment, as we see many more of that evidence happening globally, I think buying gold and real assets will still be a trade that will continue.
Janet Moy from RBC Brewing Dolphin, many thanks for your thoughts. Okay, we've got some breaking news now, and it's Merger Monday on Wall Street. The deal is in the banking sector, first of all. Fifth Third Bancorp is acquiring Comerica in an all-stock deal valued at $10.9 billion. This tie-up between the two regional banks will now create one of the country's largest banks by assets. It will be the ninth largest bank with $288 billion in assets. Shares of Comerica are surging on the news while Fifth Third is under pressure. Coming up on Morning Brief Market Sunrise, Tesla shares are rising ahead of the opening bell on Wall Street, the company teasing an event on X. We have the details on what you can expect. Plus, President Trump is gearing up to announce billions of dollars in payouts to American farmers. You'll hear how one farmer feels about it next.
Are consumers still spending, or is a pullback underway? Friday's Consumer Sentiment Report, a key indicator of confidence in the economy, inflation, and spending, will help shed light on the current state of the consumer. Tune in to Yahoo Finance for full coverage and analysis.
If you've ever tried to clean a garlic press, you are going to love this. Introducing the Great Garlic. No chunks, no squeeze, no stuck pieces. It's faster, cleaner. If you cook even a little bit, you're going to need one of these. Scan the code on your screen now.
Introducing the Great Garlic, your ultimate kitchen companion. Just place a peeled clove of garlic under the grate, rock it back and forth, and say goodbye to tedious chopping and messy mincing. Scan now and find out for yourself just how great garlic is.
Out on the range, freshness is hard to come by. Whether you're riding, wrangling, or just chilling by the fire. Keep your liquids lassoed with the Liquid Lasso. Airtight and leak-proof performance that keeps bottles sealed, safe, and ready when you return to camp. And don't forget about Liquid Lasso's trusty partner, El Corco. It's bueno. Scan the code and tip your hat to the finest bottle wranglers in the West. Don't squat with your spurs on.
Whoa, 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 whoa! You've been eating corn wrong your whole life. Introducing the Cobb Gobbler. Just line it up and pull. That's it. No mess, no strings in your teeth. It is weirdly satisfying. Once you grab one of these, let's be honest, you're never going back. Scan the code on your screen now.
Say hello to the Cobb Gobbler, the effortless corn stripper. That's cream of the crop with its ergonomic design. Peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, Gobbler is built to last.
Well, it's time now for today's trending tickers and breaking news. Shares of AMD, well, they're skyrocketing this morning thanks to OpenAI. The two companies reaching a deal that could have OpenAI taking a stake of 10% in the chip maker. They are also announcing a massive computing partnership. It's a collaboration on AI data centers with OpenAI committing to purchasing 6 gigawatts of AMD's MI450 chips. The deal is AMD's biggest challenge to NVIDIA's dominance in the AI space. NVIDIA shares are under pressure on news of this deal. Tesla shares, well, they're set to open higher. The electric vehicle maker is teased an event for Tuesday with a pair of posts on X, which suggests there could be some kind of product launch. Investors and analysts have been waiting for the debut of Tesla's lower-cost version of the Model Y to help maintain sales momentum. And it's been years since Tesla debuted a new vehicle. In June, the company said it would start selling the car in the fourth quarter, but would ramp up output slower than planned. Now, Tesla is getting a boost for third quarter deliveries as the US electric vehicle tax credit expired at the end of September. But most analysts believe that without the tax credit, sales will slow down. And check out shares of Critical Metals Corporation. The stock is soaring on a report that the Trump administration is considering taking a stake in the rare earth mineral company. Reuters saying the stake would be roughly 8%. Critical Metals purchased a deposit in Greenland last year for $5 million cash and more than $200 million in stock. The government has recently announced investments in other rare earth firms, including Lithium Americas and MP Materials. But as you saw there, shares there up almost 76%. Okay, now, President Trump is expected to announce a bailout of American soybean farmers this week to the tune of roughly $10 billion. While that may be short-term help for struggling farmers, one farmer told Yahoo Finance it wouldn't address the root of the problem: tariffs. Soybean farmer Blake Hurst spoke with Josh Lipton on Market Domination. Here's some of that conversation.
The fourth quarter is upon us, and October has a volatile reputation in the markets, which it has earned. It's where the pressure tends to build and where it often releases. In many years, letting the market sail into a year-end soft-bedded Santa Claus rally if history repeats itself. Today in Stocks and Translation, we are breaking down the volatile seasonal tendencies of this storied fourth.
I want to start off kind of bigger picture, Blake, because I'm curious to hear how the American farm economy is doing right now, Blake. You know, broadly, how is it holding up? What is your sense?
Well, we're overall farm income is down slightly, but that's a tale of two different economies. Livestock, particularly cattle, are doing very well. Crop farmers like our farm are operating at a loss.
Why are you operating at a loss, Blake?
Because our prices 3 years ago for the bushel of corn was $7. Today it's $4. Our costs have remained the same. Same percentage drop for soybeans, or probably a little worse. So we've seen a tremendous drop in our profitability.
And Blake, my understanding is that in particular, it is the soybean farmers like yourself who are having a particularly challenging time. Is that accurate?
Oh, absolutely. Over the past few years, China has purchased 25% of U.S. soybeans. This marketing year, which starts in the fall, on October 1st, they have contracted for zero. So we basically, by a typical year, 10% of our crop would have been marketed to Chinese buyers. This year, we've sold zero. So that's obviously weighing on prices and makes a real concern about how we're going to even have room for this year's soybean crop. It's a good crop in much of the Midwest. We had a very favorable summer, but we're faced with low prices this fall.
So put some math on this for me, Blake. You will sell your bean crop for about what a bushel, you think?
Well, today, right around $10, and that's just barely break even on soybeans. Again, 2 or 3 years ago was $13 or $14 a bushel. So farming is cyclical, and this isn't our first rodeo with a drop in prices, but it has definitely been made worse by the trade war with China.
Let me ask you, Blake, if President Trump can cut some type of deal with Xi and get the Chinese to buy U.S. soybeans, what would that mean for your farm and for the industry?
Oh, it would be a tremendous boon to the industry if we got a deal. Of course, if we hadn't put our tariffs on in the first place, we wouldn't have needed a deal. We would have been operating in the normal market economy, but that's not the route we decided to take, and farmers are paying the price.
Well, here's, Blake, maybe, the Trump administration, I'm guessing might put it something like this. They might say, Blake, what we're trying to do is, it's big, it's